as a result of this competition increasing, as a result of awareness being created, there's a demand for better services and better returns. So the winner is the customer at the end of the day. The investor gets better at the end of the day, which is fantastic. So from the perspective of the investor, the fact that banks are beginning to offer all these kinds of services and offerings and entering spaces like insurance, by the way, because they are spaces like investment banking, spaces like stockbroking, and asset management, is a win for the investor. And it's a win for the investor also because it's a race to get these customers. So the services have to be top-notch, returns have to be good, and so on and so forth. And so they're only getting better opportunities as investors.
Hi, welcome to another episode of Make Money, the podcast. And today, we'd like to talk about banking. And I think to set the tone for this conversation before I introduce my guest, there was a certain banking executive that took time to be quite boastful about the free deposits they hold, saying they have these many savings from people that they're not having to pay much in interest, which is almost thought-provoking in terms of why should I keep my money in the bank if I'm not, earning quite the return from it. And I'm happy to have Rina Hicks to join me on this conversation. Rina Hicks is the Operations Director at Faida Investment Bank. And Rina, before I introduce you, I think it's good to put some numbers out of the way in terms of setting the tone for the discussion. So we had this banking executive, who I won't name, that was quite boastful about how many free deposits he has and is able to fund the business without, parting with a lot of interest payments to customers on those deposits. Now, banks still held an impressive 5.5 trillion shillings at the end of June. This is this year. And of course, those placements are dwarfing any other thing. If you think about the retail investors and how much they have in domestic debt, if you think about the collective investment scheme, unit trust and the likes, they are still being dwarfed. I don't think there's another pool that I would state that has an impressive, close to 6 trillion shillings. But again, we do understand that the interest earned from most of these bank accounts, especially the current and savings, is quite low. And people have been shopping for alternatives. And people are asking themselves, someone asked themselves, should I still be putting my money in the bank if all I can earn is 3 to 4%, then after fees and the likes, maybe my net return is next to nothing? And so to begin this conversation, I think I would reflect even on myself. I think my bank account is almost just, it's just a checking account. Effectively is where my employer can process my salary through. Then I am able to make payments of the same through that. And whatever is left as a surplus is basically invested elsewhere. And my question to you would be, is it how it should be? Should I still consider putting my money in the bank, or is diversifying, as I've already done, then the means to do, even as we talk of, still 5.5 trillion shillings. So it's not like bankers are losing any deposits in a sense. They're still been growing.
Yeah.
But there's now pressure, especially as people began learning of the very different vehicles they can put their money in. So, Rina, over to you.
First of all, Kepha, let me say thank you for having me on your show. It's a real privilege, and well done on the work that you're doing in creating awareness and knowledge and insights so that people can make informed decisions where the money is concerned. So well done. My name is Rina, and I am very passionate about helping people become financially literate. So before I answer your question specifically, I think it's important for people to understand what is the role of banks and what is their core business. So the bank takes deposits and they lend money. At the core of what they do, that's what they're in the business of doing. And so they make money from the margin that they make, the difference between how much they're paying you for your deposit and how much they're receiving from the loan that you borrow from them. So if I'm a bank, I want to pay the least possible, like anyone in business, you want to pay for your goods least possible price and charge highest possible price for your goods and services so that you can make a profit, right? So that's really what they're in the business of doing. And so that's why they're celebrating, or they would celebrate if they have majority of their customers, for example, in a current account. Because if I'm in a current account and all my money is in a current account, guess what? They're paying me zero. In fact, they'll charge me to keep my money in their current account. And so they have free deposits. And so if I'm a bank, I'm screaming hallelujah when I have money for free. Now, For you, the customer, your question is it okay for me to just use my bank to then just have it as a checking account, receive money and deploy it elsewhere? Well, the answer is yes and no. I think you're doing very well in terms of you're receiving money and not just having it sit in an account that is not earning you anything. Yeah. I think that's brilliant. And yes, there are very many investment products that you can move your money to. However, sometimes we don't actually always know, where should I invest? I've received 100,000. Where do I put this money? And as you're thinking, where's the money sitting? In that checking account. Is that how it happens for you, Kepha?
Mm-hmm. Yeah.
That you can't quite move it yet because you're not too sure, where do I move it? Mm-hmm. You're still thinking about it. Or sometimes it's just the convenience or the inconvenience or the forgetting of, I need to get this done. And so you find a month has gone and your 100,000 is still sitting in your account. Mm-hmm. So the question then is, how can you leverage banks? Because banks don't only have a checking account and loans as products. You can have a call deposit. You can have a fixed deposit account. You can have a savings account. Some banks even have fund management services. And so it's important to understand your bank. What services do I have? And if I have money for short periods of time, how can I earn the highest interest rate possible? So the mistake we make as account holders is not negotiating with our banks to understand how can I maximize the rate that I can get with the money that I have, even 100,000 shillings. Mm-hmm. Some banks will tell you, okay, for that amount of money, we'll give you 10% or we'll give you 8%. But, negotiate so that you're not getting zero.
Yeah.
Mm.
So I would be interested to know then, passing on the same question to you.
Sure.
Do you keep your money in the bank yourself?
I do. Mm-hmm. I do. As an individual, I do. But even as a business, as we invest for our customers, we do. Yeah. So let me speak first from an individual perspective. So, sometimes you want to also diversify. I don't want to put all my money in a money market fund, for instance, because money market funds can collapse. I also want to diversify and put my money in the bank because the bank may be more secure than this money market fund that I have put in my money. Because I just, you just never know. A money market fund, we've had it in the past anyway. And it's not just in Kenya, it's globally, where an investment has been made in a commercial paper, for example, and then the commercial paper goes belly up. Yeah. And then guys lose their money and it takes the money market fund time to pay you back. It's not risk-free. Neither is the bank, but you're kind of just putting your money in this one and the other one. So when I have my money in the bank, I will call the bank and ask, where can I deposit this money? What rate can you give me? I have X amount of money, and they'll tell me. And then I'll make a decision. Does it make sense for me to put it here or to put it elsewhere? I have put money in a call deposit, and a call deposit is simply a certain account with a bank where they give you a preferential rate. It's not quite as high as a fixed deposit rate, because with a call account, as it says, you can actually just tell the bank, I want the money today. And within the day, you have access to your money. Mm-hmm. Instead of having it in a current account just sitting there, then they'll move it to a call account earning a fairly attractive interest. And then, your money is not earning zero. I think the key message here is, please make sure your money is earning you something. It should never, ever earn zero, even if it is in a current account. Yeah. You can have a call account where you move your money from the current account to the call account and move it back when you need it. Mm-hmm. And those who are in business, so maybe you have a cash shop somewhere, maybe you're making whatever kind of sale, whether you sell clothes, cars, houses, whatever business you're in, call accounts are important to take advantage of, because you sweep your money from your current account to the call account, hold it there even a month, a week. Maybe you're waiting to make a payment for something. Maybe you're importing things from Turkey and you have some money available, but you don't need to pay yet. Just have your money in that call account. It will earn you something and sweep it back to pay. Mm-hmm. So you can use, the banks have very many products that you can make use of. And now they're being very innovative because of all these other products that have come in.
And I think the question back to your first response, you did mention that there are quite a variety of accounts. How come as consumers we tend to only think of banks as your current and savings account, your current account basically?
Yeah.
What have you identified perhaps to be the gap that people are knowledgeable that you can keep your money in the bank, but most people are tending to earn nothing and think that's the only thing they can have? Yet they are, like you mentioned, the call deposit accounts. You also have your fixed deposit accounts in a sense. What's stopping us from also, diversifying. Even as I keep my money in the bank, I can have my current ones to sort my day-to-day needs, my payments that I know are so frequent, can have some money sitting there. And then I can try to take advantage of, the fixed deposits accounts and the likes.
I think when you walk into a bank, and I'm speaking generally, and you say, I have some money, I need an account. And if I'm speaking to a salesperson and I don't specify the purpose for my opening the account, they will give me whatever account that they think is going to suit me.
Yeah.
And so I will end up potentially with a current account, unless I say I want to earn interest or I want least possible fees. For you to get best price in anything, you have to negotiate. And I find that a lot of times, and I don't know whether it's our culture, we are afraid of asking questions, maybe because you will be seen as being uneducated or silly or stupid or you don't know. But let me tell you, the people who ask questions, even the ones that you think are dumb, are the smart people. So learn to ask questions. That's number one. Number two, I think we're a bit transactional. I think we're very transactional in the way that we engage with services and products. You go to a hospital, the doctor says you have this, and you say, okay, where do I pay? And you pay and you move on, right?
Yeah.
But it's no, I need you to explain to me, what do you mean by that? I researched this and this. Challenge and ask questions and seek to understand, so that as you're making a decision, you're making an informed decision. Don't ever feel intimidated by the person across the table, because they're there to serve you. And I think that's the perspective that we need to have as people seeking a service. And always know that you can negotiate anything and everything. So I think the point here is, please ask questions, seek to understand. And then secondly, make sure that you make the person who is serving you a friend, create relationship, so that then they're able to serve you from a place of care, as opposed to just being a transaction. That way, then you'll always get information when there's nice products that are there. You'll understand that there's more than just a current account. Because then have a meeting and just know, what are the different products available for me? Which one would make sense? I want to be able to, and express your goals. That way, then you get potentially the best offering there is. Also, shop around. Don't just go to the first bank because it has the nicest logo or the busiest one, in terms of advertising. Shop around and find out who are the banks that are there, that are solid, that I can put my money in, and who that I can talk to. So shop around and see what rates are there. Is there one that gives me a flat fee, irrespective of how many transactions I do? Or depending, maybe if I don't have many transactions, I can do a pay as you go. So depending on also your circumstances and your use of the account, you can choose what works for you.
And in terms of the alternatives, and like you said, you can always negotiate. There are other products beyond your current account to tap in. Some of them have had quite the high hurdle, depending on the bank. Like you said, you have to shop around to see. Someone will ask you for 500,000 shillings if they are to get you on their fixed deposits account. I saw an interesting one, again, not naming the bank. They're asking for 50 million. I'm like, wow, you've taken
as a minimum deposit.
As a minimum to get your highest return. So to get your highest fixed deposit return. So the hurdle rate was quite high. And for some people, they might be, okay, let me go MMF then. I can still put my 50,000 and get, quite the double-digit return as they are now. So is this a challenge now upon banks to try and democratize, so that it's no longer the big depositors, the corporates, the private firms that are getting the highest returns? Can they still accommodate? I know we'll still come to them diversifying also in terms of opening their own unit trust, their own fixed income funds. We are seeing now banks also getting into the space of asset management. But beforehand, is there still a need to relook at what's already traditionally on offer, where, someone with 100,000 can still get into a
So it's difficult for them to then match a minimum, the kind of rates that money market funds are offering, because banks have huge costs. The technology that they have put in place for you to be able to move money from M-Pesa to the bank and do all these fantastic things and not have to walk into branches, that technology is expensive to run. The kind of compliance that they have to do as a bank, those costs need to be met, and the banks need to make a profit. And so there's a certain margin they need to make. And so for as long as they can make that margin, they'll continue to reduce the rates that they're going to pay you and charge high interest rates on their loans. And so that's a fact. And that's why they are banks, because that's what they're in the business of doing. And so I think the point that I want to make is that your bank is not your be all and end all. And that's why we have a financial services market. And that's why Faida Investment Bank, for example, exists, because there's things we can do that your bank will never be able to do for you. But your bank is important. We all play a role in the capital markets and in the financial market. And every country requires all these different players in a financial services market. There's a place for an insurance company. There's a place for an investment bank. There's a place for a commercial bank. We all play a different role. And it's important for us to understand that we don't want to turn commercial banks into investment banks or into asset management companies because they are commercial bank. So I guess it's, what are my circumstances? I think as an individual, I have to ask myself, what is it I'm trying to achieve? Okay? I need a bank. And I need a bank because it's where I receive money from my employer, and I'm able to move money to different places to pay for different things. And even as I do that, how do I maximize my returns even within the bank? I think that's the message I want to state. But when you're looking at investing, I don't think the bank is where to look unless you're going into the bank's asset management business. Does that make sense?
Yeah.
If I'm investing, the bank is not the place to invest. The bank is a place for me to keep money for short periods of time. I'm parking money that I have a use for. And then I have other places where I'm investing my money. So investing your money could be in a money market fund. It could be in a special fund. It could be in real estate. It could be in other asset classes. But the bank is more, it has its role. I hope I'm making sense.
It does make sense. I think you bring out the point that it's a universe of players.
Exactly.
Think of them as planets. Earth has its own specifications. You go to Jupiter, it's a very different space. So if that as an example does make sense. And I think I'd like to come now to your role, and like you mentioned, the alternatives. Yourself, Faida Investment Bank, as an investment banker, you're separate from your traditional bank where, lending is the primary goal.
Yes.
You seem to be giving banks a run for their money, and we'll come to your feelings about that. But there's something interesting I picked out from a CBK survey, and these were commercial banks, kind of rattled by, their role in intermediation is kind of going away. People can now go to Dow CSD and a CBK, buy bonds themselves directly, previous to where they had to come through banks, and, there were some fees charged over there. At the same time, we've also seen banks, like you said, we don't want commercial banks to become asset management firms or investment banks, like you rightly put it. But we're also seeing them diversifying their own income sources. So I've seen several number of banks, starting their own MMF. So before it used to be, it's investment bank, it's Faida Investment Bank, let's go see what they have. But now your regular, your usual tier one is also now offering you an asset management bank.
Yes.
I don't know whether you relish this challenge or how you'd respond to that. Banks are now being rattled. There are more options, and you have to really make a case for everything. If today, Rina Hicks comes for the investment bank, I have my 100,000, my bank comes, my MMF comes, and someone else, and government also comes, and there's Dow, Kepha, you can invest here. We have quite a number of players that can now compete for the same money in terms of an investment destination or a place I can put my money. Are you relishing this challenge where it's no longer, nobody's just sitting cozy. The days of sitting easy are now being challenged. And, that comment from banks, I found it quite interesting because they are profitable. They are still holding a lot of deposits.
Yes.
Some of the money market funds are already investing again in the same fixed deposit fund. So the money somehow will still find itself in the same bank. But you can see that they're in a sense rattled, or they're in a sense seeing that change happening. How do you take this all in yourself?
So I think there's two perspectives I have. The first perspective is the fact that as a customer, as an investor, I think it's fantastic. Because as a result of this competition increasing, as a result of awareness being created, there's a demand for better services and better returns. So the winner is the customer at the end of the day. The investor gets better at the end of the day, which is fantastic. So from the perspective of the investor, the fact that banks are beginning to offer all these kinds of services and offerings and entering spaces like insurance, by the way, because they are spaces like investment banking, spaces like stockbroking, and asset management, is a win for the investor. And it's a win for the investor also because it's a race to get these customers. So the services have to be top-notch, returns have to be good, and so on and so forth. And so they're only getting better opportunities as investors.
Yeah.
I think for us as market players, the challenge, I can't call it relishing the challenge because challenges are not relished. I think it's just, wow, we have to really innovate. And we have to think out of the box. And we have to be creative and innovative in the way that we provide our services so that then we just improve ourselves and become better. Again, I love what you said in the beginning. We can't just sit and relax anymore and be like, yeah, the money will come. Do you know, I remember 2008, our head office was in town at Windsor House at that time.
Yeah.
And we had queues of people. We were on first floor, the stairs down the stairs onto the road, university, came in Mwindi Bingu, round the block, people queuing to come and buy shares.
Yeah.
Today, it's a very different story.
True.
We still have people coming in, but we hardly ever have queues. Why?
Yeah.
Because the market has done what it's done. It's not as vibrant as it used to be. We're not having any new listings as much as we were before.
Yeah.
The economy has changed, and it's not quite the way that it was. And the interest rates environment has been very high. So now you're finding that people have moved towards interest earning instruments. And so we have to find ways to diversify our offerings and to help our customers do better. I think the other thing is that as a result of that, it has made us create new products that weren't there before. So for example, right now, we've created a new product called the Oak Special Fund.
Yeah.
And the Oak Special Fund is a response to a need and a problem that exists. And what is that? This thing of, do I buy Dow CSD or do I buy Tesla? Maybe NVIDIA, or maybe no. Let me invest in India because India has been doing very well in the capital markets.
Yeah.
No. Perhaps let me invest in the Eurobond because the yields are good. No. You see, it gets confusing and overwhelming for a retail investor to sort of look at all the different investment opportunities and companies that exist to decide, maybe let me put a fixed deposit in this bank. No, let me move it to a call. It's like, oh my gosh, can somebody think for me?
Yeah. There's so much.
It's a lot.
To choose,
There's a lot to choose from. Is it this money market? Is it the other one? And so we come in to say, look, at the end of the day, you want your assets to do three things for you.
Yeah.
You want to be able to protect your money. You want to be able to have a safety net. Should things go wrong, you lose your income, you have a safety net. Number two, you want to be able to have your money grow alongside you. And finally, you want an opportunity to create real wealth. We are here to provide those products for you that can help you secure your money, have a safety net, make sure that your money is earning alongside you, and also give you, an opportunity to create real wealth. And so all we do is explain what products. Once we start with you, we've understood what your goals are. What do you really want to be able to achieve?
Yeah.
And we align your goals with a product that suits you. And that's where investment banks come in. Because we're not just about one single product. It's looking at what do you want to achieve? What are your objectives? What are your circumstances? How much time do you have this money for? What's your risk profile? And based on that, we now structure an investment or investment products that would be suited to that. So I think the key thing here is for people to know they're not alone. And they don't have to figure it out all on their own. No. So like now for us as a special fund, we were talking about call deposits and depositing. Because we have, huge amounts of money, we're able to then meet those minimums that you're talking about that banks are asking for. Whereas an individual will be told, I'm sorry, you can only get 9%. Yeah. We can get 15, 16 even, when an individual is getting 9%. So we're able to leverage our size and get better returns from investing as a block with pooled money rather than individuals. So there are opportunities that individuals can get that can help them decipher through all of these different products. Yeah.
Right. And I think this is the point where I ask you to look into your crystal ball. 5-10 years from now, we do know, and I think there was a survey recently, I think from Standard Chartered Bank, just showing, knowledge or financial literacy is quite high in the country, and this has allowed people, like you said, today I can sit here and buy NVIDIA, I can sit here and buy Alphabet, I can sit here and buy Meta. And so this creates almost infinite choices for where you can put your money. And it's the same people now, yourselves as market players are having to compete. It's Kepha alone, but Kepha can invest in 10 places.
Yeah.
What makes you better than the other is, the way like you said, it's needs basis. What am I looking? What am I keen for as an investor or as a depositor with yourselves? So looking forward 5-10 years from now, how do you see the landscape changing? Do you see quite the change where, we might see, market players giving around for the money, around for the money from each other, where there's quite the competition? Where will it leave players? Might we see consolidation? What are we likely to see in the space where, the competition is quite there? There are quite a number of players. And also we have a consumer who's now more aware that there are very many different places. People are now buying index funds. People are now buying, ETFs on, the S&P 500 in the US. You're buying it right from Nairobi. So with infinite choices and a more knowledgeable consumer, 10 years from now, how might, the different assets portfolios look like?
Yeah. You're right. With so many different choices, it becomes very difficult for people to kind of get the kind of returns that we're seeing in terms of profits and growth. And so, there's likely to be, particularly in the banking sector, there's likely to be consolidation. The cost of funds, attracting deposits is becoming higher and higher. People are aware. Before they call the bank to even get a rate, let's say they want to buy something overseas, they need a hard currency. They don't just call one bank, they'll go online, where's central bank, and they'll negotiate. People have learned to be very smart. And so because of that, there's likely to be more consolidations. I think we haven't seen them yet, but I think there will be. I think some of the smaller banks may consolidate. Bigger banks may look for smaller niche banks that are in areas that they're looking to get into. So that's likely to happen. But I also think we're going to see expansion of some banks, as we began to also see, into the rest of East Africa, and perhaps consolidation that way, because Kenyan banks are amazing. I've done a bit of work in the rest of the region, and I can tell you we have superior financial services in Kenya. And so I do see opportunity for banks in Kenya, perhaps not necessarily only consolidating internally, but acquiring banks around the region. So whether we're talking Ethiopia, Uganda, Congo, and maybe even potentially going into countries like Zambia. I think Kenyan banks have proven themselves in so many different ways, have provided services on a level that is world-class. And I do see potentially growth in that direction. I think the key, of course, is issues around currencies and all of that, and that's a whole big conversation around, what happens in some of the areas or countries where the currencies are an issue, like, for example, getting foreign currency and so on. But some of those hurdles, as they get figured out over time, we'll definitely see huge expansion into other countries, but also within the country, just a consolidation.
All right. So as we wrap up, I know yourself individually, you are passionate about, increasing the levels of financial literacy, and you've been doing quite a thing. I've seen your YouTube channel just yesterday, and I think you also are writer on these matters also. You carried the book yourself. So as we wrap up, maybe you would tell us more about what you do, individually in terms of contributing to this space, and perhaps you can tell us about the book as we close.
Sure. Yeah, so I am very, very passionate, and the passion came from mistakes I've made myself, watching clients do amazing things with their investments, and just being consistent in the way that they've invested and grown so much. I've been in the industry for 20 years now. And so as I've gone through my journey, sort of just learning in the process, I've just realized, gosh, this thing is just about understanding what I need to do to learn, and once I learn, then I can create a system of being able to generate incomes from different investments that can support me as I continue to grow. So through the journey, I ended up writing a book. That was the beginning of my journey, and the book is called Moneywise. I actually carried a copy. I hope you can see it right there. It's called Moneywise: Create, Grow, and Preserve Wealth. And the process of writing this book was quite amazing. I ended up speaking to 5 or 6 different very key market players who have been in the sector for a long time. I remember talking to Dr. Mudida. He's
now the central bank as the head of research.
Right? James Moria, people like Brian Kiai, private equity investors. I spoke to a gentleman called Bo Sloet. He's Norwegian, he's Dutch, and has been in the private equity space for a long time. Just people, experts who can speak into my content from a place of accuracy, but also am I communicating the right thing? But also had to write the book from a place of stories, so that it's a finance book, but it's a light, easy read that a 15-year-old can pick up and read and understand. A 40-year-old will get something out of it. And so I wrote the book and launched it in 2016. But the content is evergreen. You know, it doesn't expire. You know, principles of wealth creation are the same.
Change,
You know, look at George Clayton's book, The Richest Man in Babylon, right?
Still makes sense today.
Right.
Some of those examples are on BCs.
Exactly.
Them,
So I think the need that I had at that time was to create content that would be relevant and relatable for people who are in Africa. Because at that time, there was not much content at all when I was going through this journey myself and trying to get educated on how do I save properly, what tools do I have, and how can I effectively grow my wealth. And so I wrote a book for Africans, and that would be relatable for people who don't have as many products as we have, whose retirement benefits are not as advanced as some of the other countries overseas. And so I definitely encourage everyone to pick up a copy. You can go on MoneyWise, our website, moneywise.co.ke, and you'll be able to get a copy. But I'm also passionate about investment products, and that's why I'm in a Faida Investment Bank. And so for anyone looking to invest with us, I'd encourage them to go onto our website or just email us, info@fib.co.ke, and we'll be able to get back to them with any information that they need.
All right. Thanks, Rina. So that brings it to a wrap. So much appreciated the insights you've offered. I think some insights here for someone, wondering, should I still be keeping my money in the bank, or where else can I keep my money in the bank? I think you've tackled most of those questions, and we appreciate that, you've achieved the outcomes of, the desired topic here. So, much appreciated. And, we welcome you any other time we feel we need your insights. We will for sure be linking to yourself. And, so that has been Rina Hicks, Operations Director, Faida Investment Bank. And that has been another episode of Make Money, the podcast. Remember, you can catch us nation.africa, businessdayafrica.com, and across wherever else you get your podcasts from. That has been another episode of Make Money, the podcast. See you next time.